myself, Rusty, and Pat in front of a crowd at a live auction event. And back when the state of Ohio and the state of Indiana announced the shelter-at-home restrictions there in mid-March, we made the decision within about 48 hours to convert all of our upcoming auctions to online-only events. Now, this was not scary for us because we had done and we've been offering online auctions for a number of years. So we made that decision because we wanted to make sure our staff, our clients, and our customers would be safe during this virus time period. We also knew we had the technology to manage those sales very successfully. And so we made that switch, and Pat's going to discuss with you here very shortly what the results were and how well that worked for us. I sit on a large regional health board here in Northeast Indiana, and there was a comment made in this morning's board meeting from one of our technology leaders, and he was talking about virtual health, which some of you may have used. We're talking about virtual auctions, and I think this comment pertains to both. But we've had probably the advancement of technology in the virtual space 5 to 7 years in about a 2-month time period. And I think that's probably an interesting way to look at it. We've done online auctions for a long period of time, but not as many as we did back in April, and all online only. So we'll talk about that in a second. Due to the size of the audience this afternoon, we have muted all of you. So if you want to ask questions, please use the chat feature as part of Zoom. And again, Nolan and I will work on answering those questions at the end of our session today. So I'm going to start by sharing my screen with you. We've got a PowerPoint presentation to kind of walk you through and show you some graphics that we want to talk through. And then I will quickly turn it over to Pat. But let me share my screen with you, and then we will get rolling. So who is Halderman? The Halderman companies have been around since 1930. The man in the middle of this screen, my grandfather, Howard Halderman, started our business back in 1930. So we are 90 years old this year. So we've been doing this a long period of time. And since 1930, we represent landowners, all different kinds of landowners, primarily farmland. Don't manage much in the multifamily or residential space, but we do manage a lot of farms across a number of states throughout the U.S. And we provide services that can be complete farm management, consultation, real estate brokerage, and appraisal services. And we are in our 3rd generation of business this year. Halderman Farm Management manages upwards of 240,000 acres in 19 states. On the real estate side of our business, Halderman Real Estate Services is brokering somewhere between $100 and $110 million in sales annually. And that business also does over 800 farmland appraisals each year. As I said earlier, founded in 1930, I'm 3rd generation ownership of the business. The key point on this slide is that bottom point. The average tenure of our staff is greater than 20 years. So when you hire a Halderman representative, you're going to get somebody who has a long-term experience in the region where your farm is located. They know the farm operators, they know the crops, they know the soils, and very likely will be in a great position to manage that property appropriately. And then this slide just simply shows you all the various states that we do manage properties in today. This allows us a little different perspective. We're able to talk a little bit about blueberry production in Southeast Georgia, or veg crop production in Florida, all the way to almonds in California, and a whole host of crops in between, rice and cotton in the Delta, and of course, for most of you, the corn, soybeans, and wheat that we handle here in the Midwest. So with that, I'm going to turn it over to Pat Karst. Pat's our Vice President of Real Estate, works out of our Wabash office up here in North Central Indiana. And Pat's going to talk a little bit about our experiences this April with our auctions and our conversion to online only. Pat?
Thanks, Howard. One of the things I'd really like to start with is go back to our history with online auctions. And we started offering online auctions as part of a simulcast with our live auctions back in December of 2013. So we've done this for a long time. We're very comfortable with it. We've experimented with, I think we're on our 3rd service provider. So now we have a a provider that gives us a very easy, intuitive program to use. It allows bidders to bid without any worry, without any concerns, and it also helps us maximize the sales price for our customers. So the process for an online auction is very similar to a live auction. In fact, up until the date of the auction itself, it's exactly the same. We use the same marketing, the same brochures, the same newspaper ads. Our reps are out beating the bushes. They're talking to potential buyers. They're talking to loan officers. They're doing everything they can to maximize the sale price of that farm. So the bidding is open for 24 to 48 hours. So it'll start on, for example, 8 o'clock on a Tuesday morning and go to 5 o'clock on a Wednesday afternoon. Typically, there's very little bidding on that first day. Most of the bidding is in the second half of the second day as the auction nears the end. So there's a hard ending time, and say it's at 5 o'clock on Wednesday afternoon. Now everybody says, well, what happens if there's a last second bid? What happens if somebody comes in and puts a bid in at 30 seconds before the ending? Well, that automatically extends the bidding for another 5 minutes. So anytime there's a bid within the last 5 minutes of the bidding, it extends it 5 minutes. Everybody has an opportunity to bid. Everybody has an opportunity to buy the property. So after the auction's over, there's a little bit of change there too. The purchase agreements in a live auction are typically signed at the site, and we collect a check for the earnest money that night. Right now, we're using DocuSign, so we email the purchase agreements to the buyer or deliver them in person the next day, and then we collect the earnest money. It's either wired into our account the next day or we pick it up in person. And then when all the way through closing, it just goes as normal. There's no changes in the closing. So we've conducted between 5 and 10 online auctions a year for the last 3 or 4 years, and they're just gaining in popularity. So Howard, would you advance that slide, please? So I want to talk about why sellers like them, why buyers like online auctions. Both of them like the limited travel. You don't have to take the time to travel to a property. You don't have to take the time, especially if you're coming from a long distance. Less emotional, you might ask, well, what's that got to do with it? Selling a farm for a family member, especially in an estate situation, or, you know, for second, third generation, it can be kind of emotional. So this is less emotional. It's less of a public event. The opportunity for people to buy property or bid from property from anywhere around the world is huge. We had a bidder this year that was bidding in April that was actually planting his oats in west central Indiana while he was bidding on the farm. Rusty and I sold a farm in Fairmount, Indiana one evening. The buyer was a sailor stationed in Japan, and he bought a farm in Grant County, Indiana. So I think that just speaks volumes about how easy this is to use. The anonymous bidding is huge because a lot of buyers don't want to show their neighbors that they're interested in this farm. They don't want to show their hand. So they like it that it's anonymous. When they're bidding, all they can see is bidder 102, 105, 110, whatever is bidding, and they don't know who that is. There are a couple negatives, and really the one is that some of the older buyers in particular are not comfortable with technology. We thought that might be a problem in April. It really wasn't a problem. We had a hotline set up that people could call with problems or questions, and we did not receive the first call. Anybody concerned, anybody had a problem with the bidding. We had 2 bidders that were not comfortable. One aligned with his loan officer, so he aligned with a professional that helped him with the bidding. And then the other one was on the phone with me the night, the guy that was bidding from his tractor while he was doing the oats. And he said, if I run into trouble, my daughter-in-law's here and she can take care of it. So that really didn't slow things down. So let's fast forward to April of 2020 and let's see how things did, because we had 18 auctions in the first quarter of 2020. In the first 3 months, there was 18 auctions. In April, we had 10 auctions scheduled. 7 were scheduled to be live, 3 were scheduled to be online only. As Howard said, within 48 hours of being shut down, we had talked to all of our clients and we had decided to take all these auctions online. So we sold all 10 auctions online. And you see that in the first quarter, 78% of the farms sold the night of the auction, sold at the live event. 80% of the farms we offered in April of 2020 sold at the live event. We can make the argument that the 2 auctions that didn't sell, we believe that brought fair market value, but the owners decided they wanted more money and have since taken those farms off the market. You'll see there that 94% of the farms that we offered at auction sold in the first quarter. So 78% sold the night of the auction, The rest of them sold within a day or two after the auction. The dollars per WAPI, now several of you have heard of a WAPI, maybe you haven't, but WAPI is Weighted Average Productivity Index. And that's a number based on soil types that allows us to compare farms from one geographic location in the Eastern Corn Belt to another. So what we do is we take the dollars per tillable acre that the farm sold for, divided by that WAPI. So if the WAPI on your farm might be 140 or 150, and that gives us a dollars per WAPI point, which allows us to compare farms in northern Indiana to southern Indiana to western Ohio to southern Michigan. So you'll see that the dollars per WAPI in the first quarter was $51.25, and in April of 2020 it was $50.75. So the online auctions had no effect. Some people said, will it sell for as much money? And you can see that it sold for just about the same amount of money. The other thing we track is what the sales results are compared to what the seller is expecting. So that sold above release says that in the first quarter, it was 10.64% above the release price. So in other words, 10.64% of the farms sold above the release price. In April 2020, it was 10.6. And I can't get much closer than that statistically. So there was absolutely no difference in that. In fact, one of the farms sold in April sold for 23.6% above the release price. So in other words, they realized 23% more money than they were expecting. So the online auctions process performed flawlessly. We had absolutely no issues. In fact, Howard's got a thing here on the screen share that this is what the buyers will see, bidders will see on the online auctions. It's very simple to use. You simply click on the tract or tracts that you're interested in, and then you fill in your bid amount. It automatically knows what your bidder number is. The registration is very, very simple. And once you're registered for an auction, you're registered for every auction. So it's easy to use and really simple. So in summary, Howard, I would say that the Halderman has really honed this online process into a really finely tuned machine. We've known for years this process would work. And what COVID has done is it accelerated the progression of the online auction and showed buyers and sellers that this will work. And I think the online real estate auction is going to follow the same way the livestock auctions have gone, the equipment auctions have gone, the eBay and that kind of thing.
So Pat, would it be safe to say if I'm a seller of a farm today and I want to do it at auction and I want to do it in July, and we don't really know at this point whether states will be fully open or not, are you comfortable recommending to me an online only auction in July of 2020?
Absolutely. Absolutely. I agree with what you said, that the online and the virtual processes have advanced exponentially in the last 60 days. I've not talked to anybody that's uncomfortable with doing this kind of thing online.
That was our experience. I sat in on all of our auctions in April, and as I watched those, we had the hotline call center. Jessica took any calls. We had a couple people call in, just questions about how to get logged in or something, but we had no one call in with any challenges on placing a bid or how to get that done. So again, it worked pretty seamlessly from my perspective. So we're going to transition because Pat mentioned that for many years, a lot of livestock, especially show livestock, and farm equipment, tractors, combines, tillage tools, planters, all of those sorts of things, those types of personal property have been sold via an online bidding platform for a number of years. So I'm going to have Rusty Harmeyer, our auction director, to talk a little bit about his experience. Now, Rusty has Harmeyer Auctions and Appraisals. They do a lot of personal property auctions on their own account as well as for our Halderman clients. And so I asked Rusty to talk a little bit about how our auctions work from an equipment standpoint and how the online system works for them. Rusty?
Yeah, thanks, Howard. And our system, our platform is very, very similar to the Halderman platform that we utilize for the real estate. It is a little different, but very, very similar features and functions, extremely easy to use, easy registration. It just fits the online bidding and the personal property a little easier than the platform that we utilize for the real estate. You mentioned the Harmeyer Auction and Appraisal Company. My personal property business, we started utilizing the online-only auctions in January of 14. So we've basically been doing the online bidding for personal property as long as Halderman has been doing it for the real estate. We started out just utilizing it for estate type assets, household type auctions, and found it to be extremely successful. The buyers really like it. We found that we were expanding our market reach, and we were bringing buyers from a greater distance than we were when we were doing a traditional live event where everybody would show up at either at the property outside or at the fairgrounds building or wherever we rented. And a couple years into that, we had the opportunity to sell a lineup of farm equipment, and it wasn't a huge lineup. There was only about 30 pieces. And I thought, you know what, let's try this online event. Let's just do it completely online. The logistics wasn't real great. It was hard. We didn't have a lot of parking. And I thought that was a way that we could facilitate getting a lot of buyers there without causing problems with parking and road traffic and things like that. And it was a huge, huge success. As I mentioned, we only had about 30 pieces. They were all really nice. Late model pieces, but we had buyers from 9 states, and as far away as Nebraska, as far west as Nebraska, and as far east as New York, up into Michigan, and we got down into the Carolinas. So our marketing was basically the same as we would for a live event. We utilized the regional farm papers, our mailing list, our email list, social media, things of that nature. And with that success, we've had a couple opportunities with Halderman clients to help them facilitate liquidating their farm equipment, and have just had tremendous, tremendous success. Just last summer, we helped a farmer liquidate. There again, it was about 40 pieces, all late model farm equipment, and had those pieces of equipment bring 20% higher than appraised value. And there again, we had bidders from New York, Ohio, Michigan, Wisconsin, 9 states were represented. And what you're seeing on the screen there, that is an equipment auction that we facilitated with one of the Halderman clients up in northwestern Indiana. I think there were 17 pieces in that auction, and just got along the very best. We had 7 states represented in that auction, and actually sold equipment to 4 of the 7 where the bidding is happening. So the online platform is absolutely a viable option. I would argue that from a logistics standpoint, getting the equipment ready, the cost savings of not having to move it to a rented location, or there's some concern about some folks having a couple 300 people show up on their farm, and they're not comfortable with that. The online platform just really facilitates doing the auction without some of the logistical on-site problems. We also are a Tractor House representative, Auction Time representative, and I'm sure there's many of you that are aware of that platform. We utilize that. If we just have 1 or 2 pieces, we'll go ahead and facilitate listing that piece on Auction Time, and have been very successful with that. I think we've listed about a dozen pieces, and 10 of the 12 pieces have sold extremely well. So, the virtual world of the online auction is not anything strange in the ag industry, and is just becoming more and more accepted. And we're just excited to offer this service, or help generate this service to some of our Halderman clients. Pat and I just signed a contract today with a multi-site grain elevator that we're going to be liquidating all of their personal property. And there's sure enough assets, and there was the facility to host a live event, but we chose, had a conversation with the client, and we chose to do this online. And it's just almost commonplace now when it comes to the farm equipment segment.
So Rusty, one of the things that you and I had discussed before is that it is not unusual for you to have a bidder show up at one auction, a live event, and be bidding on property, livestock, or equipment at somebody else's auction online. Is that pretty typical?
Absolutely. You know, there again, like Pat mentioned, our buyer that was stationed in Japan at the time he bought that farm, we have seen buyers that are attending a live event somewhere else and actually buying equipment on our auction online. Just the convenience of it. The buyers really, really, really appreciate and enjoy the fact that they can continue to do what they need to do, whether that's, you know, drive a tractor, go to another auction, be it at the daughter's soccer game, but they can attend our auction and not have to drive very far or spend the day. You know, I know we've all had that experience where we've drove 2 or 3 hours to get to an auction, spent all day, because it never fails. The auctioneer always goes the wrong direction when you want to buy something. You spend all day there and then get outbid, and you drive home for another 2 or 3 hours with nothing but a couple pieces of pie and a cup of coffee or a Diet Coke or something. So this allows you to be very efficient as a buyer. It allows you to be very efficient and productive, but yet still attend the auctions that you want to do. I always tell our sellers when we're talking about a live event versus an online event, and the online auction allows the buyer to attend our auction at the buyer's convenience. And that in today's society, and as busy as everybody is, and going 4 or 5 different directions all the time, the online platform sure facilitates letting the buyer come to our auction at his convenience.
Thank you, Rusty. Great update on the farm machinery side of things, as well as livestock. And I know we didn't talk about that specifically here, but that's certainly a way a lot of livestock is sold, especially on the show side of things. And I guess what I wanted to convey to our audience this afternoon is, as we go forward, obviously meetings like this will probably be much more commonplace than face-to-face meetings, even when COVID is passed. Because it is more efficient. Likewise, auctions are probably going to see more and more of this type of activity because it's convenient and it allows you to do what you want to do when you want to do it and still bid on a property or piece of equipment as you wish. So one thing I do want to mention before we leave this subject and move on to land values, we do a lot of sales that probably get to be multi-parcel, and there might be a larger farm, and you could have 5, 10, 15, 20 tracks at one of those events. And if we sell a property that starts to give 6 tracks or more, we will likely still do that as a live event. The reason for that is the myriad of combinations that could be put together starts to become pretty complex. And it is easier for us to assist bidders in accomplishing what they want to accomplish when we're live and face-to-face. Now, obviously, we can't do that in a COVID situation, but as we go forward in the future, we'll probably still do those large multi-tract auctions as a live event. We'll still offer online bidding, so if you can't attend, you can certainly watch online and you can still place bids online or place bids via phone, but it'll probably still be simultaneous with a live event. So with that, I'm going to move on to the next subject, and that's farmland. And I know that many of you have been looking at your stock portfolio, your 401k, maybe bonds, and outside of the bond market, those other assets have not been faring all that well over the last couple of months. And so your question might be, I own a farm, what's the value of farmland today? And as you see on this slide, values are stable. For how long is really the question. And so as we think about this, the farmland market today, there's not much for sale. I looked at one of the farm papers this morning when it came through our door, and there were probably 2 or 3 farms total in all of Ohio, Indiana, and into Kentucky where this farm paper covers. this time of year isn't necessarily a high sales season, but by the same token, to have one or two farms is an extremely low number. And one of the reasons for that is we don't have a real motivating reason why a seller might sell today. We go back to the fall of 2012. You know, this year's an election year, presidential election year, so was 2012. And back at that time, President Obama was anticipated to be reelected, and there was some concerns from landowners that come his reelection and maybe a Democratic Congress, we could see a change in capital gains tax rules. The capital gains tax rules never changed. However, because of that fear, we saw a lot of sales, and we did sales probably 3 to 4 auctions per night, or per week, I should say, from August all the way through December, that fall. All because there was this fear that capital gains taxes would change. So we have not, since that time, seen an outside driver of farmland sales. Not interest rates, not farm programs, not tax law changes. And so that still remains the case. And what we've experienced so far with COVID-19 is that it's not spurring farmland sales. It's actually been the contrary. And I think we've seen this in the residential marketplace too, that there's actually less of a supply of farms for sale. And that's what I articulate in this statement as well. The number of sales remain well below normal at this point, especially in the larger tracts. Now, cropland values peaked in late 13, early 2014, and then declined 15 to 20% from that all-time high. Most of that decline was in 2014 and 15, and we have been in a sideways market for the last 4 years, which I'll show you on a couple of slides here in a second. The timber, recreational, and rural residential values were higher through the last few years. Low unemployment, strong economy really drives those segments of the marketplace, and they were doing relatively well up until late March. So we have some question marks about where those are today, and those do track the general economy, and so when the general economy suffers, one might argue that those values may suffer as well. Here is the Federal Reserve Bank of Chicago's survey of agriculture bankers in the last quarter. And you can see from January to April in the district, all states reported either no change or up in the first quarter, except for the state of Wisconsin. I think that's largely due to their dairy industry, and the dairy industry has really been hammered with low milk prices for the last couple of years. And so a lot of those are coming onto the market, unfortunately, and I think that's what's dragging that marketplace down. But in the I states, there was still pretty good strength. April to April, to the right, from April of 19 to April of 20, you see strong values in Iowa, Indiana, and Illinois. Again, the decline in Wisconsin and Michigan was largely neutral. The overall 7th district was up a whopping 1%. So again, a sideways channel, not a lot of movement one way or the other, but certainly not bearish through April of 20. Here's the Purdue survey, and this is fairly old at this point. In fact, this survey will be done here in a couple of weeks. It's a June survey. But you can see there, this shows the peak in late 13, early 14, and then the decline followed by this last 3 or 4 years of pretty steady prices across the board in all land qualities. Now, Pat mentioned earlier our WAPI index, and he showed you that the first quarter of 2020, we were somewhere a little bit above $50 per bushel of productivity index. So what does that mean on a longer term basis? So this is 2019. And you can see we started the year with that red trend line below $50 per bushel, and we ended above $50. 2019 was a year where we started out with a lot of concerns back in May and June with planting and prevent planting. But then market facilitation payments were authorized again by Congress. Yields ended up better than a lot of people expected. Not record yields, but better than they expected. And so a whole lot of circumstances basically generated a reasonably optimistic outlook toward the end of the year, and our sales finished pretty well. These are Halderman auctions and sales only. These aren't any outside data points. These are sales that we know 100% how they transpired. Now, here's the trend in 2020 that Pat was talking about. And you can see it started maybe a little stronger at the beginning of the year, and we kind of dwindled as we got toward here in April, and this includes all the April sales. So we saw a little bit of a trend line down, but it still was around $50 per WAPI point, as Pat showed you on that earlier slide. So it's hard for us at this point to say that there has been a real negative impact due to COVID in the current marketplace. Now, we've had no sales in May. We have no auctions scheduled for June. And we do have a couple that we're working on for July. Summertime tends to be a lower number of sales time period for us. But I think a lot of sellers basically have gone into the mode. I don't know where this market is today, so I'm just going to put my farm sale ideas on hold. And so I think that's what we're experiencing at this point in time. Farmland is a real asset. It generates real income every year, and it's not going to disappear. And so for those reasons, people want to hang on to those types of assets in markets like we are today. So here's the overall trend line. And I talked about that sideways channel. And if you look at that red trend line through the middle of this slide, right at $49 to $50, that entire 4-year time period. So that's what I mean by a sideways channel. Now, there's a lot of noise in this, and we had sales higher above $60, and we had sales down below $30 a point. But the trend line is really what we want to focus on there. And you can see that we've been in this pretty consistent sideways market. So the question is, where do we go from here? Dominant purchasers in the market last year, 2/3 of the buyers were farmer buyers. 1/3 were farmland investors. That typically tends to be a little more 50-50, but last year was a little more farmer buyer. I think this year you may see the opposite. I asked our staff, number of sales compared to previous years, and this was done in March. And you can see up through the early March time period that it was mixed. We kind of felt like, well, some 25% saw more sales, 32% saw less sales, and 40-50% saw the same. So you'd almost call that a pretty flat supply marketplace when you averaged it all out. The buyers in the total marketplace, not just our sales, but the whole marketplace, I asked our group, so who's the predominant buyer? And this is a consistent answer across the Corn Belt. Doesn't matter what survey you want to look at, from Iowa State's to the University of Illinois to Purdue's, 80% of the buyers, 75-80% traditionally, are farmers. So in spite of what you might think about their farm incomes and things, they tend to be the dominant buyer. It isn't some foreign entity coming in and buying land. It isn't private equity out of New York City. It's farmland transitioning to that farmer buyer down the road. So here's the Purdue Ag Barometer. And I like to talk about this chart because it reflects really the attitudes that exist in the ag space. And what's interesting about this, it shows the top and the bottom of this in about a 2-month time period. So you go back to the fall of 2016, right after President Trump is elected, you see a jump where we had been hovering down around 100 on average for that first year of the barometer, and then all of a sudden it spikes up above 150. And then for the next 2-3+ years, it hangs in that 130 range, plus or minus that whole time period. And then we get into this optimistic time that I talked about, late in 19, early in 2020. We get an agreement, phase 1 agreement with China. That combined with commodity prices in January and February and a reasonable winter had a lot of optimism out there for farmers. And that 168 was an all-time high index value of the Ag Barometer. And in 2 months, it was back at one of the lowest levels the barometer has seen, all due to the impact of COVID. So this barometer historically has been pretty indicative of farmland values. Now, we haven't had a lot of sales since back on April 17th. So maybe this negative attitude time period kind of comes to pass during a time period where there's not a lot selling. If I had a seller say to me, sell my farm tomorrow, I would probably be fairly hesitant. Come July, I think my opinion certainly changes. So let's talk a little bit about debt. Farmland debt is something to be concerned about. You might say, well, where do we stand today? And you can see on this slide that in terms of real estate debt, we're actually above what we were back in the 1980s. Now, this is adjusted for inflation. Otherwise, the number would be substantially above. But non-real estate debt, equipment debt, operating lines, those sorts of things is actually less than what we were back in the early 1980s. So the debt that's out there is largely on real estate, and real estate values are a multiple, 2 and 3 times what they were back in the early 1980s. One of the key things, while debt is relatively high compared back to the 1980s, you can see the debt on the left side of this chart, and then you can see the interest expense on the right. And that's one of the key differences to this time period. We are in a very low interest rate environment, and the interest expense for the federal government, as well as for those who borrow money to operate farms, is much less today than what it was back in the 1980s. And so that is a big departure that I think is benefiting farm operations, and it benefits the US government as well when you have a lot of debt out there in those sectors. Here's another way to look at debt, and this is the debt to equity or debt to asset ratio. And again, referencing back to the 1980s, which was the previous farmland depression, you can see those numbers got up toward 30% on the debt to equity ratio, and we're half of that today at 15.7%. So that basically is that multiple of farmland value going up, while debt levels, inflation adjusted, remain very similar to what they were there in 1980. And then finally on the debt, there's the debt to income ratio. So this is debt divided by your income. Obviously with income dropping down, that debt over income number causes that multiple or that number to go up. And they will tell you, the experts will say that when you get above 5, that starts to become a warning sign. And why? Well, back in 1979, 1977, we eclipsed 5, and sure enough, it was a warning sign of what happened later in the 1980s. You can see for 20 years, we stayed below 5, and just the last couple of years, we've been above 5, but then in 2020, we trended down below 5 again. So it dropped out of that caution zone and certainly hasn't spiked to the level that it did back in the 1980s. Now, here's the concern that does exist out there on debt, and that is working capital. That's cash on hand. What can you get your hands on in terms of cash to pay bills? And you can see the erosion of working capital over the last few years. So this is the big concern that most lenders are looking at from an agricultural standpoint going forward. Now, you may have read about farm bankruptcies. Certainly there have been some farm bankruptcies that have happened out there, but I want to put it in perspective for you. The 2018 filings were 498. The March of 19 through March of 20 filings were up to 627. So we have had an increase, a 23% increase over the previous year. If you see that as a headline, that is kind of scary. However, I want to keep it in perspective. Go back to 1987, there in the middle of the slide, there were 5,788 bankruptcies, Chapter 12 filings across the United States in 1987. And this past fiscal year, March 19 to March 20, there were 627. So while it's up, certainly is, that's a concern, but it's not near what the number was. It's just over 10% of what they were back in 1987. And then here's showing where some of those bankruptcies are. And again, look at the state of Wisconsin. I talked about land values going down there due to the decimation of the dairy industry. And that's certainly represented there with the bankruptcies that exist. So where are we going from here? You know, farm values depend on these 3 things: farm incomes, interest rates, and supply. So let's break down each one of those and think about them. So incomes, if you go back to that golden era in agriculture, 2007 to 2013, we had a lot of positive net farm incomes and a lot of cash was generated from that. As you saw on that working capital chart, 2014 to 2020 has been the opposite. We've had much lower farm incomes and it's been a cash drain. Working capital has been eroded. One of the things that's remained consistent throughout that time period, gosh, the last 20 years, interest rates are still pretty historically low. And the supply of farms for sale remains below normal. So 2 out of those 3 factors, I would argue, are still somewhat bullish today. So here's real net farm income. You've seen a lot of these slides, I'm sure, in various iterations. This shows it, really the decline that I was just articulating over the last 4 or 5 years. Here's another way to look at it. This is direct farm payments as a share of net farm income. And you can see that at various times in history, middle 1980s, the federal government provided significant bailouts in terms of direct farm payments. Ours have gone up because of market facilitation payments the last couple of years due to the trade issues with China. but they're not near what the percent they were back in the 1980s. But they're still becoming much more significant to a farm operator's bottom line. And then here's the farm cap rate on farmland today. And so if you ask the question, what's my farm? If I buy a farm today, what's it going to generate in terms of cap rate? Think CD rate at this point. You're talking somewhere around a 3% type of number today in Indiana farmland. So talk about the income side first, and that's cash rents. And so largely, that's the easiest way to kind of compare farms. And you can see that this slide looks strangely like the farmland value slide. And that's because incomes do drive land values. And so the land values tend to follow rents. And you can see the peak in rents in 2013 and 14, their slide, like farmland values did, and then the sideways channel that it's been in. Here is USDA's survey of rents. You can see again the decline in 2015 to 16. And then slow creeping back upward toward $140 per acre. Again, this is across the entire United States. So don't think that this means anything toward your farm here in Indiana. That's an average, but it just kind of shows you the trends over the last 2 years. So here are forecasts. Long-term world demand fundamentals remain bullish for agriculture, but this is going to be long-term, right? Because this certainly isn't happening in the next few months. Obviously, demand has been totally destroyed on the ethanol side for the relatively short time frame that we're looking forward here. And with the global economies really struggling, are we going to get the sales to other countries that we might like? So this is certainly a long-term fundamental that you need to continue to keep in the back of your mind. And it's why we invest in farmland, because farmland is a long-term investment. It's not a short-term play. Interest rates are still favorable. This is out of the Chicago Fed letter, 4.51% real estate mortgage rates. That's 15-year fixed money. That is the lowest in recorded history by the Chicago Fed in the 7th District. Think about that. I don't know how long exactly they've been recording that, but probably 50 plus years, and that's the lowest ever. So still, relatively speaking, low interest rates available out there. And as I said earlier, the supply of farms is just almost non-existent right now. So supply and interest are still pretty positive factors. The demand fundamentals are pretty bearish right now, hopefully bearish long term. So my question is, how much cash remains in the countryside today due to working capital erosion? So when we start to talk a little bit about where we think things are going, we had the all-time high value for prime farmland peaked at 1314. From a perspective standpoint, you're still in that 80th percentile of those values. So farms that peaked at $10,000 an acre are worth $8,000 today. Still higher than every year prior to probably 2009 or 10, just from a historical perspective. We foresee in markets in timber, that's a real question mark. Timber has been working its way up. It's been getting a little stronger up until COVID. The housing market doesn't seem to show a lot of erosion right now, and there have been a lot of sales of lumber due to the fact that people have been sheltered at home. So I don't know about timber and where that goes. That really will depend on how long the recession might exist. Recreational land, that's disposable income. That's what people use to buy land they want to hunt or recreate on, and that's probably going to be weaker if you had a sale of that right now. Rural residential, I initially wrote weaker here, but I changed it today to steady because I continue to read that residential sales have been pretty strong out of the Indianapolis marketplace throughout this last couple of months. I think a lot of that has to do with a low amount of supply and low interest rates. But regardless, I think those values are probably steady today. And then that last statement, the below average to hassle farms, those values are weaker. And why? For the fact that they're a hassle farm. It's 80 acres in 5 fields. And with today's equipment, a farmer looks at that and says, yeah, I really don't want to rent that. Or if I do, I'm going to pay a much lower rent to. So where are values going from here? To be bullish, and it's hard to be bullish today, but here are some of the points that I would make if I wanted to be bullish on land values. There's still a low amount of debt versus assets in agriculture today. You still have very low interest rates. You have a low supply of farms for sale. Those are positive factors. Biofuels okay, we have a mandate requiring so much ethanol to be blended. However, demand is so low right now that that is certainly going to be a problem in the corn market, and that is being reflected in the low corn prices we see today. World population growth, again, that's a long-term play. Trade deals, and that's really going to be the key. Does China live up to the phase one agreement? Does President Trump and the Chinese government really get at odds again and tear up whatever phase one agreement we had? Those are some big unknowns. The potential for inflation. If you're a land buyer, farmland tends to be a hedge against inflation. And with the amount of money the federal government has put out there in support for a wide array of industries and paid out to taxpayers, certainly one can make an argument that inflation might happen in a year or two. So that it means farmland would be a positive place to have your money invested. And then finally, water resources and competition for those. So the bullish factors would be some of those items that I list there. The bears probably have a little bigger argument today. Number one, and this is the biggest one, is farm incomes and the impact of the pandemic. And certainly demand has been destroyed, especially on the corn side. Soybeans, much less so. Soybeans have some potential to have some higher prices, but corn has really been decimated. There are predictions of a 3 billion bushel carryout. And if you see that kind of number, that's probably looking at corn prices that start with a 2, which certainly are not profitable. So that's got to be a little bit of a problem and an overhang on land values, I think, as we look at the rest of the year. Global production and U.S. production will be the factor. And we just planted this crop. No one has any idea how it finishes. Yes, the NOAA National Weather Service is predicting plenty of rainfall throughout the Corn Belt and warmer than normal temperatures. So one would argue that means pretty good yields, which would be lower prices. But that's still an unknown because we're here in late May. The world economy tanks. That equals lower demand. And that certainly has happened in many places around the globe. Trade agreements or not, and that impact on demand. We talked about that just a second ago. And then the biofuels RFS mandate, I think that still remains in place. I saw, 15 billion gallons is the mandate for corn-based ethanol. And there actually was an increase in ethanol from other biofuels. So that policy is not changing. But the reality is, what does the economy allow for the blending to go on? And then finally, do interest rates eventually increase due to inflation concerns? Probably, again, a longer term perspective. But certainly the biggest overhang on land values right now is that demand and lower commodity prices, which will tend to impact rents negatively this fall for next year, and then that'll provide or angle toward lower land values. So I also talk usually about other asset classes, and if you're an investor and you're looking at investing in farmland versus CDs versus bonds versus the stock market, those returns might skew where you put your money. Well, right now, treasuries and CDs, those are pretty low returning items. The stock market, who knows? So you can see a lot of people either want to get into the stock market, these low valuations, or they might look at farmland and say it's an inflation hedge, and I like having my money in something that I know will provide me a return every year, always has a 0 vacancy rate, and probably goes up long-term in value. And my bigger concern is this last one. How do farmers fund working capital if they run out of that? And will they use more debt on land to stay in operation? Or will some choose to sell? And that really could then factor into that supply of farms for sale part of the equation. And if you got to ramp up in supply and less money available out there to buy farmland, that certainly could contribute to lower farmland values. So I like to leave people with a positive feeling. I know that the last few slides have been maybe not all that bullish, but that's where we are today in May of 2020. I'm a long-term investor in farmland. I own farmland myself, and I'm not going to sell it. I look at farmland as being a place that is a great storehouse of wealth. Historically speaking, if you look over 40 or 50 years, farmland appreciates at 4 to 5% every year on the average. And so that's the kind of investor that I think most of our clients tend to be. And so if you're a long-term investor, certainly you can be optimistic. Right now, we're in a steady sideways market. Who knows where we end up this fall? A lot of that will depend on production and prices this summer. So to leave you feeling a little bit good about why you own U.S. farmland specifically is just the productivity of the U.S. farmer today. And you can look at these numbers and you can see the increase of our productivity in this country, which outperforms every other country in the globe. Brazil could argue a little bit on soybean production side, but certainly the U.S. farmers have the access to the best capital. They have the access to the best seeds, other pesticides and fertilizers, the newest technology in terms of equipment, and that's what generates these kind of increases. So with that, that concludes my remarks this afternoon. And Nolan, we've got about 8 minutes before we hit 3 o'clock. I know if anybody has any questions, please submit them to the chat room. And I know we have one question that came in. It said, if I had my farm appraised pre-COVID, how has that affected my current value? Great question. I think I just said a few minutes ago, who knows? If you had it appraised in March, February, January of 2020, and it was appraised again today, an appraiser by rule has to use comparable sales to generate the value of the appraisal. And those comparable sales only exist probably pre-COVID or those auctions that we did in April, which were post the shutdown. And so right now, you would make the argument probably an appraised value is pretty steady today with what it would have been earlier this year. So now, where we end up this fall, if we're looking at lower corn and soybean prices and then some pressure on rents for 2021, I think land values probably slip a little bit. And so you could be looking at appraised value based upon comparable sales in August, September, October that probably reflect a little bit lower number. Rusty, Pat, would you have any comments on that?
I agree, Howard. I don't think there's any way to prove that COVID has had a negative effect on land because we don't have any data points.
Exactly. Yeah. We're doing some appraisals and we're steady with what we were pre-virus.
You could say, I think that land values ought to be down, but there's no way to prove that.
And at the end of the day, when you do an appraisal, you got to be able to prove it. And so that's comparable sales. You have my contact information on this slide, and we recorded this presentation today. So if you have someone that was unable, they had a conflict come up and they were unable to join us and you want to share this with a family member or someone else, more than happy to make this available to you. And you can send me an email at howardh@halderman.com, and we'll be glad to share the presentation with you. Or you can go through Ask Halderman on our website if that's easier for you, and you can request it from Debbie there. So I'll be glad to get that out to you if you want to share that with other people. Any other questions, Nolan? No. All right. Well, hey, we're going to give you back about 5 minutes in your day. And thank you all for attending this afternoon. We do appreciate all that you do for us and our companies. And as you go about thinking about your farmland investment, if you have questions, what's my farm worth? What should the right rent be? Those are questions we get all the time, and that's what we know. That's our business. So if you have any questions or concerns about your farmland asset, don't hesitate to give us a call. And as I tell most of our clients, ideas are free. It isn't until we actually implement those ideas that you will be charged a fee. So don't hesitate to give us a call, and we'll be glad to help you in managing your farmland investment for the future. Thank you again all so much.